Hello everyone out there. Welcome back to our YouTube channel Finbuzz Learning. In today's video, we are going to discuss the concept of bills receivable in detail. So without any further delay, let's get started. We will first understand that what does bills receivable mean. So a bill of exchange drawn by a vendor on its client or buyer is referred to as a bill receivable. It is an evidence of debt. The bill becomes a bill receivable for the drawer, or we can say for a vendor, when the drawee or the customer accepts it and sends it back to him together with the money. On the other hand, because it represents a liability for the drawer, it becomes a debt due. It is also known as account receivable and notes receivable. The drawer can make different use of a bill receivable, like he may keep the bill until it matures and then pays the drawee. He can sign the document on behalf of his creditors. With a bank, he can get the bill discounted. Hence, in the simple terms, we can say that it is a contract between the seller and the buyer to reclaim or recover a debt. Now, there arises a question that what happens when bills receivable are dishonored? If a bill is not paid by the specified due date, it is considered to be as dishonored. The sum owed by the client is returned to the account receivable account in the event that the bill of exchange is dishonored. Any additional fees that the business must pay are the responsibility of the customer. When a bill is not honored, the amount owed is shifted from bills receivable to account receivable account, although the customer is still liable for the payment. Now, let's know the format of bills receivable. The books for bill receivable are kept in chronological order. It is initially practical to keep day books at a company when there are lots of transactions. These days, trade receivable accounts are posted using books. Additionally, bills that are still unpaid have varied due dates. Due to a variety of factors, some of them might not be honored. Day books for bills receivable are typically used to keep track of unpaid debts and investigate the circumstances surrounding them. Now, let's discuss the position of bills receivable in the balance sheet. So, the bills receivable is of two categories. The first one is short-term bills receivable. In the balance sheet, bills that are due within a year of the balance sheet date are categorized as current asset. The another one is long-term bills receivable. In the balance sheet, bills that are due more than a year from the date of the balance statement are categorized under non-current assets. Now, coming to the types of bills receivable. So the relationship between the business owner and the account holder can be noted using a variety of receivable entry types. The first type is account receivable. The amount that a company owes for goods or services that were given to a customer on credit is known as accounts receivables. The longer your receivables go unpaid, the harder it will be to secure funding to manufacture products for future sales. Payments that are not collected decrease working capital and lengthen business cycles. To improve cash flow, it should be a top priority to collect any unpaid dues. If this is not done, it will have a negative impact on the cash flow that can be used for other business needs. Now coming to the next type, that is notes receivable. The only difference between notes receivable and regular account receivable is the dates of payment. When you have traditional receivable, you typically give your customer a 2-month window to pay you back. However, with notes receivable, the payment due dates can be extended to a year or more. The use of a promissory notes in notes receivable allows you and the other party to agree on a longer payment time. Promissory notes assist in enforcing your right to payment from the debtor. No interest will be added to the debt settlements that are completely within the designated time range. Interest is calculated on a monthly basis in the event that the debtor requests a longer time frame for making payments. Now, the next type is trade receivable. If you provide a customer with a goods or services on credit, trade receivable is another common receivable that applies over here. Trade receivable is different from normal account receivable and notes receivable. These accounting transactions in trade receivable represents the results of a sale that your company actually made. In the current trades receivable account, an entry for trade receivable is made when the customer purchases a good and is given short-term credit to pay back the loan. Now the last type of bills receivable is other receivables. So other receivables include interest receivable, salary receivable, employee advances, tax refunds, loan made to employees or other companies, and advances on wages paid to employees. Having an understanding of different types of receivables can help you track who owes you what and when in a more structured manner. And taking that action is crucial if you want to make sure you have the money you need to maintain and grow your company. So guys, this was all about bills receivable. In our next video, we will be going to cover the next topic. So stay tuned with us for further videos. Thanks for watching. Do like, subscribe and share the channel.